Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after the long weekend, traders returned to find the Australian dollar has covered further ground following the recent hawkish comments from the RBA last week. The RBA caught many traders and economists off guard when it decided to hike rates further to 0.25%. This now takes the benchmark to 4.1%. Looking ahead this week, plenty of fireworks are ready to be let off as traders await the US government's release of the latest inflation update. Along with that, we also get the US Federal Reserve rate decision, and also back in Australia, we get an update of the Australian jobs market. Looking at the current pattern, a very strong rebound from 64.5 level has kept the bulls on a journey to now challenge the top side around 67, 80, 85. I feel that this is an important level, as we can see right back to the beginning of this year around February, that this level has held very well and may do so again. If contested, we could see a pullback towards the level around that 60-day moving average, seen around 66, 60, 70. Looking at the euro, the market still appears to be locked in a 107, 108 range, as the dollar index, which measures the greenback strength against a basket of 6 major currencies, holds around 103.50. In light of the pattern, it's still relatively weak, so I don't feel there'll be much beyond 108, and therefore could eventually see a downturn back towards the region of 107, and then maybe towards the lower region, seen around 105.85. The dollar yen outlook still coasts to a sideways pattern and above the key level around 138, 65.80. In light of the current weakness, we may see one more down test, but I feel that the bulls are again to snap up any pullback and eventually see a rise up towards that key level, anywhere towards 141 to 142. We've got a posted engulfing candle. Now, if we see further weakness that is beneath the level of 124.80, that would confirm this candle and also look for weakness towards the region of 124.55 or lower. But first of all, let's see how the market plays towards that 124.5 level. Any advancement may struggle, as we've seen recent supply emerging, may do so again. But we do need confirmation from the technicals to support the bearish outlook further. Wrapping up with gold and oil, the market was a little bit weaker, and with the key events this week, would see a further downward move if the outside range day is confirmed, and that is from a close under 1,942. Technicals are still weak, and therefore the base still holds and still remains vulnerable at 1,928 to 33, with a cap seen around 1,973 to 74. It would seem that the market found weakness towards that 69.5 key level, and from there plunged and puts a little bit more risk to the downside and back towards that key level of $65 a barrel. However, it's going to be a bumpy ride all the way down, and may even see small squeezes to the upside where the resistance is capping around 69.35.55. Overall, though, the market is somewhat weak due to the break and therefore could see further supply into the coming week. Well, that's a wrap for the start of this week. Thank you very much for joining me, and as always, look after the intraday port. I hope you enjoy the great start to the day.